What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks. Those 12 free stocks will be worth up to $30,600. There's a link down in the description box of the video. Click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. The Fed has just increased short-term interest rates by 25 basis points today. That is the 10th rate hike since March 2022. And the reason the Fed has increased the short-term interest rate, AKA the Fed funds rate, is in an effort to fight super high inflation. Inflation hit its peak in June of 2022 at 9%. And over the last year and a half, with the rate hikes, the Fed has brought inflation down from 9% to 5%. But that's not the magic number. The magic number is 2%. So there's still a lot of work to do. With the increase in the short-term interest rate by 25 basis points, that brings the Fed funds rate to 5%. Now, the last time it was that high, we can go back about 16 years ago. And you know what happened in that time frame. That was the Great Recession, right? So the question is, will the Fed continue increasing short-term interest rates, or will they pause? My opinion is it's a wait and see. The Fed won't meet again until June 13th and 14th. So I think over the next month or so, as more data comes in, AKA CPI report, jobs report, as those reports come in, the Fed will be in a better position to assess if they need to continue increasing short-term interest rates to fight inflation in order to get inflation down to 2%. But I think what the sentiment is out there is they believe the short-term interest rate at 5% is sufficient enough to continue to cool the economy so that what can happen? Prices can start coming down. Because see, the Fed's number one objective here, guys, is price stability. And all that means is they want every American or every person living in America to have the ability to be able to afford the basic things they need to live. And right now, with inflation being as high as it is, that's been a problem. So their goal was to bring inflation down to create price stability in our economy again. Now, over the next several months, the Fed will continue to watch the economy. They're going to watch inflation, and they're going to watch the financial markets, because all three of those are very important to equilibrium in our system, our financial system, in our economy. With these failed banks, and we've had 3 of late, they are also waiting to see what the fallout is from these failed banks. And all those things are going to be indicators whether they continue to increase short-term interest rates. My personal belief is they won't. My personal belief is they will pause. What we also got to, pay attention to is this red-hot labor market we have. Because that's one of the reasons why inflation is still stubbornly at 5%, is because of this red hot labor market. People can easily get a job. Companies, in order to compete for these people to fill their job positions are offering attractive salaries. Plus, people are getting raises. So as long as the American people are getting raises, they know it's not hard for them to find a job, then there doesn't really create a sense of financial pain for them. And a lot of times when there's no financial pain being felt, we tend to go out and spend money. Now, there is some financial pain being felt through interest rates though. Remember, over this last 10 rate hikes, our 30-year fixed rate mortgage rates have went from 3% to over 6%. So the housing market has cooled off somewhat because of decrease in demand. The higher interest rates go, when it comes to 30-year fixed rate mortgage rates, the less people can qualify. So the demand for real estate has cooled off. Prices have not cooled off because there's a lack of inventory. So the houses that are on the market, even though they have fewer eyeballs on them because demand is down, sellers can feel confident that I'm gonna leave my house at the price I got it at because there's not a lot people can choose from. Anytime you got more demand than supply, it runs up prices, no matter what you're talking about, right? Whether it be homes, whether it be cars, whether it be grocery, gas, whatever. If you have a short supply and tall demand, it runs up prices. So the Fed will keep an eye on this red hot labor market as well, because that's the thing I think right now is keeping inflation at 5%. Other than that, I think if the labor market would cool off somewhat, then I think inflation would come on down faster. Even though I think it'll continue to come down, I think when we get the April CPI report, which I believe we'll get that in the middle of May, I think we'll continue to see inflation come down from 5% to somewhere in the 4s. That's my opinion. I don't have any fact on that, guys. I'm just giving you my opinion. I always recommend you guys get out and do your own homework to make sure you're understanding and coming up with your own conclusion of what's happening in our economy, what's happening with inflation, and what's happening in the financial markets. But for me, I still see the stock market severely on sale. Even right now, with the S&P 500 index trading around 4,100 points, it's still discounted from December of 2021 when it was trading around 4,700 points. So there's still some opportunity for us as investors to dive in and start buying some of these ETFs and index funds that track the S&P 500 in the total stock market. And there's still some opportunity to buy some individual stocks of companies that you know and trust and believe will be here tomorrow. They're still heavily discounted, guys. So there's opportunity for us to buy those investments now, those paper assets, be prepared to hold them for 3, 5, 7 years. And I think if we do that, we give ourselves a really good opportunity to increase our net worth. I've been telling you guys this for over a year. And I don't just tell you this, I actually do this for myself. I'm dollar cost averaging in every single month, guys, because I know I've been through this before. I've been through it in the 2008 downturn where paper assets were severely discounted. They were severely discounted. And I just kept buying them. 10 years later, I tripled, quadrupled my money. Now, I'm not saying that'll happen for you. I'm just telling you that's the power of the stock market as it starts compounding from, reinvesting your dividends to the investment appreciating due to per share price going up, right? So we can create some net worth for ourselves if we just continue to be disciplined, consistent, and patient. Drop me some comments down in the comment box and let me know what you guys think about the Fed increasing short-term interest rates by 25 basis points. And what do you believe that means for our economy, for inflation, and for the financial markets? Love to hear your comments, so drop them below. If you want them 12 free stocks from Webull, click on that link down in the description box. They're gonna give you up to 12 free stocks, and those free stocks will be worth up to $30,600. So Click that link below. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.